Hello everyone, I'm Tony Kay. I'm the editor of Eureka Report and this is Property Point. I'm joined once again by Nerida Conisbee, Chief Economist of REA Group. Hi Nerida, how are you?
I'm well, thanks for having me on.
Always a pleasure. Nerida, today I wanted to have a chat about what's happening in the property market, or what's likely to happen I should say, for 2017. What are your thoughts?
Well, I guess there's a few different things we could probably cover off. The first one I think probably worth discussing is negative gearing. So negative gearing obviously taken off the table with the coalition government coming in 2016. It was raised again at the end of 2016 with Rob Stokes, the New South Wales Planning Minister, saying that it would increase affordability for Australian home buyers if it was scrapped. So in my view, it would improve affordability. I do think we probably would see a slowdown in the market, perhaps even a price drop. But overall, we do need to have a bit more of a robust discussion about what it means to the provision of rental housing, and certainly rental housing is the big issue because negative gearing has been very successful in getting rental housing out of government hands into the private sector. So negative gearing would be one that I think we'll continue to see as a big political topic. Another one will be affordability. So affordability is really is poor, very poor in Sydney. If we have a look last year, in 2015, Sydney came up as the second least affordable city in the world after Hong Kong. Since that time of that survey, Sydney house prices have gone up 10%. Hong Kong, which was number one, prices have actually dropped by 8%. So I've got no doubt that Sydney is probably sitting there as the least affordable city in the world when you look at an income to price comparison. So affordability, big issue. I think issues of how we solve that affordability will continue to be a big discussion point, and whether we look at monetary policy, whether we look at taxes, whether we look at new supply, we really do need to continue to have a robust discussion on how we solve that issue.
Yeah, there's a lot of complex issues. Negative gearing, as we know, was a political hot potato during the last election. It's been raised many times before, get negative gearing or abolish negative gearing, but that would obviously have big ramifications for areas, such as the apartments market, where, as you know, there's a lot of pressures in Melbourne and Sydney in terms of surplus apartments.
Yes, well, yeah, there's lots of issues. The negative gearing has helped with supply. It doesn't always help with supply in the right areas, so that's a bit of a challenge. I think, though, we do need to recognise that if you have a look anywhere in the world, there are some incentives to provide new rental housing, and whether it is negative gearing, which is kind of a common policy that is implemented in other countries, whether you have a look at tax breaks for institutional investors is another one that's typically done, that you give tax breaks to big developers or big owners of property and sort of encourage them to provide rental housing. The third way is obviously keep the government to keep the money and provide the rental housing themselves. So, I think I'm not for or against negative gearing as such, but you do need to look at the ramifications of scrapping it, that it's not going to just hit people who are invested and perhaps over leveraged. It is going to have a longer term impact on the market that does need to be considered.
So beyond what might happen on the policy level, what expectations do you have for the property market overall in 2017?
Well, it will be interesting to see what happens to the amount of stock in the market. We did see very low levels of stock enter the market and comparatively high demand. So it's really been fueling that price growth. I think one of the problems, though, for people who are potential sellers in the market is that there's lots of things holding them back in terms of why they're not selling. So whether it's because if you have a look at alternative asset classes, the returns aren't always that great. There can be a lot of volatility in other types of investment that we haven't had in Australia for quite some time, particularly for residential. So that lack of volatility, the poorer returns elsewhere is a big factor. I do also think that a lot of people are already highly leveraged. So I think there's a lot of people that really would like to upgrade but potentially can't upgrade because they've already borrowed so much and aren't really prepared to borrow more in the market. And then there's obviously, our tax policy really does favour people holding on to property. That, things like negative gearing, the things like, for older people, there's not much incentive for them to downgrade to a cheaper home. So you've got a lot of older people who have outgrown a large family home that are really just holding on because it's still a pretty good investment for them. So, there's lots of things that are contributing to that.
And have you got any views on what may happen with property prices overall during the next year?
Well, I can't see them abating at the moment in Melbourne and Sydney. I think Melbourne, perhaps the supply of apartments will continue to lead to apartments in particular moderating in price. So if we have a look at our property demand index, Melbourne apartments are sitting at about the Australian average, which when we compare it to houses are seeing much higher levels of demand compared to supply. So primarily driven by the amount of development taking place, particularly Melbourne CBD, seeing all that apartment development. I think that will spread to other sort of inner suburban areas as well. So houses will continue to grow in Melbourne in price, but I do think apartments will see far more limited price growth. Sydney is a bit different. I mean, we're not seeing anywhere near the amount of supply in Sydney, or we haven't seen the same amount of supply for quite a long time in Sydney. And as a result, I can't really see a trigger for house prices or even apartment prices moderating in that city. So, something pretty dramatic would have to happen, whether it's a rise in unemployment, whether it's a rise in interest rates, which again I don't think will happen next year, but something really big would have to happen for Sydney prices to start to moderate. Again, Perth, it's interesting looking at Perth. We are seeing still very low levels of demand in Perth, but when you have a look at some of the suburbs in Perth, particularly inner Perth, we are starting to see price growth. So I think Perth still has a while to go, and you do need to be pretty level-headed when looking at that market. But there are some early signs that some suburbs are doing okay. So Perth, I think, won't really kick off next year. Brisbane and Adelaide, continue to be pretty moderate in terms of levels of demand, and then obviously Tasmania, which is seems to be a bit of a standout at the moment, where we're seeing levels of demand that are unprecedented, but also at par with New South Wales. So Tasmania is another one that we're watching very closely. Obviously a much smaller market, but certainly very interesting given the levels of demand that we're seeing.
Yeah, 2017 is definitely going to be a very interesting year for the property market, and I'm sure all investors will be watching the trends and trying to stay in touch with all the developments around the country. I'm Tony Kay. I'm the editor of Eureka Report. Thanks once again, Nerida, for joining us for Property Point. We look forward to seeing you again in 2017.
Thanks, Tony.